Welcome back. I am Ricky. I am the peaceful investor. On this channel, I share my investment thesis, portfolio strategy, long term view of the stock market updates, and lessons I'm learning on my journey towards financial freedom. For today's video, I thought it would be useful to walk through my current portfolio, my biggest positions, my view on the memory market, and how I'm thinking about opportunities within the AI infrastructure build out over the next several years. Before we go further, remember this content is only for educational purpose, not a financial advice. Now let's start. One of the questions I get asked most often is, what are you actually buying with your own money? So today I want to give you a transparent look at how I am positioned and where I see some of the biggest opportunities in the market today. At the moment, I am approximately 83% invested while holding roughly 17% cash on the sideline. The cash position is intentional. Market moves in cycles. Opportunities appears when volatility rises, and I always want some dry powder available when the great business go on sale. If you look at my portfolio as a whole, you will notice one major theme. A large portion of my investments are focused on AI infrastructure and the companies building the backbone of AI economy. From semiconductors and networking to optical connectivity, servers, and enterprise infrastructure. My goal is simple: own great businesses that are positioned on the right side of long term technological change. At the same time, I don't want to all risk concentrated in a single company or a single theme. That is why you will see some defensive positions and businesses operating outside technology helping balance the portfolio during period of uncertainty. So let's start with my five largest positions and the investment thesis behind each one. Broadcom. My largest position today is Broadcom. When I look out 3 to 5 years, I believe Broadcom has the potential to become one of the biggest beneficiaries of AI build out. Most investors know Broadcom for semiconductors, but increasingly, this is becoming an AI infrastructure company. Broadcom sits at the center of custom AI accelerators, networking switches, high speed connectivity, and data center infrastructure. As AI clusters continue getting larger, the amount of networking required grows exponentially. And Broadcom is one of the beneficiaries of that. The VMware acquisition also gives Broadcom exposure to enterprise software and recurring revenue, creating a more diversified business model than many semiconductor companies. For an analyst perspective, Broadcom is expected to remain one of the fastest growing mega cap companies in the market. Analysts currently expect earnings growth to remain extremely strong over the next several years as custom AI accelerators and networking demand continue accelerating. This is not a trade for me. This is a 3 to 5 years investment thesis. Now let's move on to my number two position, which is applied optoelectronics. My second largest position. This is a higher risk, higher reward position. And my investment horizon here is probably 2 to 3 years. The AI boom isn't just creating demand for GPUs. Those GPUs need to communicate with each other, and that communication requires enormous amount of optical connectivity. If AI clusters continue scaling the way I expect, demand for optical transceivers and connectivity solutions could remain extremely strong over the next several years. AAOI is a much smaller company than some of the industry giants, which means execution risk is higher. But it also means the upside can be significant if management delivers and AI demand remains strong. The company is expected to return to the profitability by end of this fiscal year. Looking ahead, analysts currently expect earning growth to roughly 450% next year, followed by another 100% increase the year after that. If those forecasts prove accurate, AAOI can move from being a turnaround story to a becoming one of the fastest growing companies in the AI infrastructure ecosystem over the next 2 to 3 years. For me, this is one of the more aggressive positions into my portfolio. Eli Lilly. This one is very different from the rest of my portfolio. While most of my investments are tied to AI and technology, Eli Lilly gives me exposure to healthcare and act as a defensive position during periods of market uncertainty. I also view this more as a short-term trade rather than decade-long holding. The obesity and diabetes markets are massive opportunities, and Lilly has established itself one of the leaders in this space. Analysts still expect Lilly to deliver impressive growth despite its size, with revenue expected to grow around 10% to 15% annually over the next few years, and earning growth approaching 15 to 20% annually. If AI spending slows temporarily, people will still need healthcare products or treatments, which helps provide some diversification against my technology exposure. My fourth position is Zeta Global. This is probably the company in my portfolio with the longest investment horizon. If management executes and the fundamental continue improving, I could see myself holding this company for the next decade. Zeta sits at the intersection of artificial intelligence, customer data, and helping business improve customer acquisition and engagement using AI driven insights. What attracts me the most is the size of opportunity relative to company's current valuation. Analysts currently expect Zeta to sustain approximately 20 to 30% annual revenue growth while profitability continue improving as the business scales. If business can continue executing and maintaining those growth rates over a long period of time, that's how you potentially create a multi-bagger investment over a decade. My fifth largest position is Hewlett Park Enterprise or HPE. This is a 2 or 3 year investment for me. HP is becoming increasingly important in the AI infrastructure ecosystem through servers, networking, and enterprise AI solutions. The acquisition of Juniper Networks has the potential to strengthen their networking business and improve their position in AI data centers and enterprise infrastructure. I don't expect HPE to grow like some of the smaller companies in my portfolio, but this AI demand, I am very bullish on this company, and this company will be delivering exponential growth. The same growth we are expecting from the another AI infrastructure companies. For me, this is a hyper growth story. It's more about owning a company that could surprise investors as enterprise AI adoption accelerates. When I step back and look at these five positions together, they tell a story about how I believe AI infrastructure evolves from here. The first phase of AI was compute, the second phase was memory, and increasingly I believe the next phase will involve networking, connectivity, and moving data efficiently between increasingly larger AI clusters. That naturally brings us to the memory. So When we talk about the memory chips, so our discussion can't be finished if we talk about Micron. So I don't want to spend too much time discussing every line item from Micron earning report which they posted few days ago. The first was revenue growth, the second was gross margins, third was earning per share, and finally guidance for the next quarter. All four of those metrics came in incredibly strong and, in my opinion, reinforced the idea that AI demand remains extremely robust. More importantly, the forward guidance suggested that demand continued to exceed supply and management remains very confident about future growth. But for me, the most important takeaway wasn't the quarter itself. The most important takeaway was what those results tell me about the future structure of the memory industry. Micron is changing how memory is sold, and the AI era is changing the rules of the game. For decades, memory was treated as a commodity business. Supply would increase, prices would collapse, manufacturers would cut production. Supply would tighten again, price would recover, and then the cycle would repeat. Investors become used to thinking about memory as a boom and bust industry. But AI changes that. Memory is becoming a strategic component rather than a commodity. Without enough HBM, AI accelerators cannot run a maximum performance. Without enough DRAM, servers cannot efficiently feed data into GPUs. Without enough NAND storage, companies cannot store and process the enormous amount of information required to train and operate large AI models. Memory is increasingly becoming one of the bottlenecks of AI infrastructure. And when something becomes a bottleneck, buying behavior changes. Customers are no longer asking, who can sell me memory at the cheapest price today? Instead, they are asking, how do I secure supply for the next 3 years? Because of that, customers are signing multi-year agreement with Micron to secure future capacity. These agreements can include floor prices, they can include ceiling prices, they can include take or pay commitments, they can include reserve production volumes, and they can include customer deposits to lock in future supply and reduce pricing volatility. Micron disclosed that it has already signed 16 strategic customer agreements. 14 of those agreements include pricing framework and minimum purchase commitments representing approximately $100 billion dollars in the future contract value. Management has also indicated that over time they expect more than 50% of companies' revenue to come through these type of agreements. Think about how different that is from the traditional memory business model. Customers are effectively reserving memory capacity years in advance because securing supply has become just as important as price. That is a massive structural change for the industry. Will cycles disappear completely? Well, probably not. There will be periods of oversupply and undersupply. But if memory truly becomes a strategic infrastructure component rather than a commodity product, the next decade could look very different from the previous 2 decades. And now let me share my own views, what I think about this. Based on Micron earnings and more importantly their outlook for the future demand, I came away from the report feeling comfortable that AI memory demand is unlikely to slow down anytime soon. What I found particularly interesting is that management didn't specify whether supply and demand would rebalance during the first half of 2028 or the second half of 2028. So, for the purpose of building an investment framework, I am making a fairly simple assumption. Let's assume additionally supply starts arriving sometimes around the middle of 2028 or perhaps during the second half of 2028. If that is the case, then from where we sit today, there could still be roughly another 2 years left in this trade before supply starts catching up with demand. Of course, markets don't move in straight lines and things can change very quickly. But based on all the information available today and based on the company's own guidance, my conclusion is fairly simple. The fundamental story still looks intact for at least the next couple of years. Personally, I started buying Micron when the stock was trading around $390. As the stock continued moving higher and eventually crossed 1000 level, I gradually started trimming my position. That wasn't because I became bearish. It wasn't because my thesis changed. The stock had simply delivered exponential returns in a short period of time. The part of portfolio management is protecting gains when positions become very large winners. Today, my remaining exposure is much smaller. I currently have approximately 1.6% allocated to Micron and around 0.6% allocated to SanDisk. So, where do I go from here? Am I buying aggressively at these levels? For me, the answer is probably not. The stock has had an incredible run this year, and in my opinion, it may need some time to consolidate those gains. Would I be surprised to see a pullback? Not at all. In fact, I think a pullback would probably be healthy after such a strong move. My current plan is fairly straightforward. If the stock pulls back meaningfully, that is when I would look to increase my position again. Ideally, I would look to see Micron trading below $1,000 levels or at least somewhere reasonably close to at that level before becoming more aggressive on the buy side. That doesn't mean the stock cannot continue moving higher from here. It simply means that from a risk or reward perspective, I'm personally more comfortable waiting for a better entry point rather than chasing momentum after such a large move. For now, I am happy holding my remaining position, watching the fundamentals closely and waiting patiently for opportunities if the market gives them to me. So that is my portfolio, my view on memory market and how I am thinking about the opportunities and risk ahead. The AI build-out is still in its early stage, and while there will be a certainly be volatility along the way, I believe staying focused on fundamentals and long-term trends gives investors the best chance of success. As always, these are simply my personal views and my own investment decisions, not financial advice or recommendation to buy or sell any securities. Thank you so much for watching. If you found this video helpful, please consider liking and subscribing to support this channel. I'm Ricky, the Peaceful Investor. I will see you in the next one. Thank you.